Gold has stood the test of time for thousands of years, surviving wars, economic crises, and market crashes. From ancient civilizations to today's uncertain world, it has remained a trusted store of value. So, as currencies lose value and market fluctuates, gold continues to be a safe haven for wealth preservation. So, in this episode, we're going to explore why gold and other smart investment choices are the best way for wealth creation. Also, the very importance of portfolio diversification. Welcome to Most Beautiful. We break down finance into simple practical steps. My name is Mara. Gold is considered a store of value. So when currencies lose their value, gold, however, tends to hold its worth or even increase. For instance, during economic downturn, cash loses purchasing power due to inflation. Stocks might experience a dip as a result of uncertainties in the market. Gold, however, retains its value, making it a go-to asset during uncertainties or uncertain times, as you may call it. Key message here is when people lose confidence in paper money, they tend to run to assets like gold because it holds its value. How to invest in gold in Nigeria? Number one, buy physical gold. You can buy gold bars, coins, or jewelry. Ensure you're buying from a trusted dealer, and it's advisable you buy in major cities like Lagos and Abuja. And very critical, ensure you obtain certificates of authenticity. This would ensure that you're buying the real thing. And if you're investing, buy 22 karat gold to 24 karat gold. This is the ideal one for investment. So for storage, consider safe deposit boxes in banks or high security home safes. Number two, digital gold. Platforms like Bamboo allow you to buy gold without necessarily holding the physical assets. You can also invest in gold ETFs, exchange traded funds. This allows you to buy into gold indirectly with your investment following gold price movements on either the Nigerian Stock Exchange or US Stock Exchange, depending on which market you want to invest in. Diversification. This is your financial safety risk, and it's very important. So diversification allows you to spread your risk across different investment classes. Please don't put all your eggs in one basket. Try and have a mix of different investment classes. For instance, you can have some of your funds in money market. This is very liquid, low risk. The next is fixed income, so steady return, stocks, high returns, but it has higher risk. Gold, medium risk, and wealth preservation, and all of that. The essence is you spread your risk, like I said, across different investment, and there's a balance. Think of it as a balanced diet of your finances or your investments portfolio. And let's look at this analogy. Maybe this will explain further. So let's say you want to make a pot of stew. Money market can be the broth, the broth of the meat, right? Your fixed income can be tomatoes, stable, reliable. Your gold can be the fish that you decide to put inside to add some value into it. Your stock can be the vegetable that adds a lot of aroma, but it needs handling so you don't overdo it. But at the end of the day, you have stew. So that stew is not made up of just one ingredient. It's made up of a collection of ingredients. So look at diversification in that light. So at the end of the day, the stew tastes nicer and is properly done. So let's compare gold to money market, fixed income, and stocks in relation to asset type, risk level, and what is best used for. Let's start with money market. So money market, short-term instruments, and risk level is low, and they're ideal for emergency funds, building your savings. Then the next is fixed income. So fixed income are longer tenured instruments. Risk level is low to medium, and they're ideal for regular returns. As examples are bonds, ideal for steady return. There are bonds that pay you quarterly. Your coupon rate is paid quarterly. There are bonds that pay you annually or semi-annually. So they're ideal for regular returns and building wealth over long term. Gold is also an asset, ideal for wealth preservation, really. Like I mentioned earlier, it doesn't react to currency crisis, wars, or anything like that. It's ideal for store of value, so it's ideal for wealth preservation. Then we look at stocks. Now, the risks in stocks are high. That's why it needs to be properly managed and properly understood. You don't just go and start buying stocks because everybody's buying it. You need to carefully analyze the company you're investing in and all of that. That is why it's also ideal that you get licensed stockbroker or you look for a financial planner, a licensed one that can handle those things to explain the risk involved. But the return is high, high return. You can triple, double whatever your money if you buy the right stock. So it's ideal for wealth accumulation. That is what stocks are ideal for. And also long-term wealth creation, because you also have to look at what your financial goal is in this various when you're investing in these various asset classes. So the final thought is build your wealth with the correct asset mix, right? One asset alone will not safeguard your future, right? That is why you need to have a collection of different kinds of assets. Have a mix of money market, fixed income, stock, real estate, and gold or precious stones. As I explained earlier, each asset class has something that it brings to the table. And depending on what your financial goal is, this would define what you want to do and how you want to go about them. But please, by all means, diversify. Do not put all your eggs in one basket. Have a mix of different assets as you grow, your portfolio grows, and you get to that financial independence that we're all working towards. So if you found this useful, please like, share, and subscribe if you haven't done so, and share this with someone you know would benefit from this. Until next time, stay financially fabulous and take care. Bye.